Well, thank you so much for joining us. Happy Friday to you. We're coming down the home stretch of our trading week. I'm Marlon Bowling with you, your tour guide to your ag commodity markets. And we're going to kind of take a look at what's setting up here on the final trading day of this week in the grain markets with a little extra help from Rich Nelson of Allendale Incorporated. And he's based in McHenry, Illinois, not far from Chicago, not just a stone's throw away, I guess you would say there, Rich, huh?
That's exactly right. We're just a little ways away. Enough to say hi, enough to say, but we don't want to live there. So yeah. definitely good for us.
Got a little bit of elbow room from the trading floor there. Anyway.
Sure do.
All right. Tell me about this overnight market activity. Let's take a closer look at our Globex grain trade and see what took place overnight. Boy, it was quiet, and I mean quiet on the corn market overnight. We had that July corn just a half higher. September is getting more and more volume now. It's just up one tick overnight at 371, and December was up 1/4 cent also at 381. Not much at all going on there. If you look at the soybean trade, of course, after making new yearly lows yesterday, it bounced back a little bit. We're about 3 to 4 cents higher across the board in the soybean markets overnight. So let's pick on these two first here. Rich, your thoughts on the corn and soybeans. What might possibly drive this market today?
I think as far as today's discussion, obviously we're looking towards weather, as we always are at this time of year. Beyond that point, a lot of people also discussing the chart picture as well. Simple point is on the corn side, we have taken quite a bit off this market. Maybe we'll find a little stability here as people wait for this next update to the forecast. And heck, we also have some estimates coming from Newswires for Friday's reports. Those grain stocks and acreage, those estimates will be out here probably maybe in this afternoon, certainly by Monday as well.
So what does your experience tell you? Is this quarterly stocks report much of a market mover normally?
You know, this, in our opinion, this actually usually is. And the question on the acreage side, it gets all the press, all the headlines, but USDA has a very specific methodology which generally keeps them from making a major change on the June acreage report specifically. So in my opinion, yes, the grain stocks are usually where we get the surprises are, mainly on the corn side, because we don't have a way of measuring that feed use in the past quarter until we find out what actually the numbers say on the grain stock side.
On the soybean chart, we're showing our viewers at home right now this November soybean chart, and it's obvious. Anybody can tell right immediately at first glance that these are new low trades here for the entire trading year of 2017. What do you think about this chart pattern here today? How important is it that we bounce off of these levels and do it fairly quickly? If we don't, does that mean another leg down?
I think it does suggest that we could see this market have some more pressure here in this next week as we wait in front of us, wait for these reports from USDA at the end of the month. So yes, we do have to have this market rebound. Otherwise, it looks pretty much on the charts. We hit new lows, and if we do not rebound, it looks like the market would be happy to accept them here, at least for the very short term. Well,
let's take a look at our wheat trade in Chicago wheat overnight, and I'm talking more and more now about the months beyond July here. September up 2 at 477 1/4 in the early morning trade. December up 1 penny 1/4. Now, if you look at Kansas City wheat overnight, in the KC wheat, you have the September contract down 1 tick at 485 1/2, but very quiet. December down 1 tick as well. And in the Minneapolis spring wheat trade, where you have that higher protein wheat, we have September 2 1/4 higher at 663 1/2. So any sense of direction here in this wheat market activity here as we wrap up the week?
I think one thing we're kind of hearing about with these further reports on the harvest side is that for the winter side, hard red, we are still seeing reports of continued problems with this protein content. With that in mind, as well as the questions about the spring wheat crop itself, originally I would say that we would have topped a few days ago and maybe have a harsh setback. I think for right now, maybe we actually will stay up here for a few more days, at least on the wheat side, waiting for a little more information. Simple issue is, unless we get the protein in the wheat, we're going to see these buyers pay attention very closely here.
And very interesting, I noticed yesterday, I'm starting to hear more comments from people out there in the Twitterverse that they're talking about some growing problems in Australia. A lot of dryness concerns in wheat growing areas there, different parts of the continent there, so we'll keep an eye on that too moving forward. We're talking with Rich Nelson of Allendale, and we'll examine your livestock trade when we come back. Well, thank you so much for joining us here on Friday. I'm Marlon Bowling with you, along with Rich Nelson of Allendale Incorporated in McHenry, Illinois. All right, we're going to focus now on your livestock trade today. And to set the stage, yesterday after the markets closed and all the traders went home for the day, USDA came out with their cold storage numbers. And let's take a look at what those numbers had this time around. So what we're doing is we're comparing the numbers in the nation's freezers to what we had a month ago and also a year ago. So the total red meat supplies were down 5% from a month ago, down 7% from a year ago. Frozen beef down 10% from a month ago, down 11% from a year ago. Frozen pork unchanged, basically, maybe just a touch lower from a month ago, but down 4% from last year. Pork bellies down 6% from a month ago and down 59% from a year ago. Let's hear from Rich Nelson of Allendale. And Rich, what do you think about those cold storage numbers there?
You know, the beef numbers were actually quite a bit surprising for us. This did imply about a 46 million pound drawdown for the month of May. Normally, we're only seeing about an 18 million pound drawdown. So definitely a better expected supply or demand here on the beef side. As far as the pork numbers, they actually did come in maybe a little disappointing here for us. This represents only a 3 million pound drawdown for the month of May. Normally, in the past 5 years, 28 million pounds. So it may be a little surprising for us. It would seem to be a bearish number for the pork, but we wonder if perhaps a good chunk of this pork in storage is perhaps for export, and maybe not as bearish as the numbers initially look here.
It'd be interesting to see how the trade reacts when we open up the futures trade at the bottom of the hour on the cattle market, where it's getting so heavily oversold here recently, and then you have these sharply lower beef inventory numbers like that. We also had numbers on the poultry, the chicken and the turkey as well, and if you look at the frozen poultry supplies combined, from the end of April, we were up 4%. From a year ago, we were 4% higher. Chicken alone was down 1% from a month ago, down 3% from last year. Turkey supplies really surged. We were up 13% from a month ago and up 17% from a year ago at this time. That could be a factor, too.
Sure, they could be. A lot of people pointing out that total meats, especially all these products, are all in expansion right now. And actually, they will remain so into 2018. So we'll be paying attention very closely to the demand side of things here these next few months.
Well, today we get the cattle on feed report after the markets close, and we have some early estimates based on a survey of the trade that was done by the Wall Street Journal. And drum roll, please, Allendale was included as one of the participants in that survey, so you helped make up these numbers. But overall, when you combine all the numbers together, they're looking for an on-feed number of 102.3% of a year ago, placements 110.4%, and the marketing's at 108.8% of a year ago. How do those fit with your estimates there in-house?
I'll tell you very clearly, we are the high group on the placement numbers, and the placement side is really the storytelling issue for this specific report. So we had this idea of tighter than expected supply showing up in spring and early summer as far as market-ready cattle numbers. However, in the past 7 months, we've placed about 10% more cattle, in fact, 11% more cattle than last year. So we went from a period of tight supplies and very high prices in recent weeks. Now we're preparing for a surge in available numbers, which will start from late July and last through September, October or so. So we certainly will see a sharp transition, and today's report will tell us more as far as that goes.
And if we look at our livestock summary from yesterday, we have to balance out the fact that we seem to have a friendly beef cold storage report lodged against these cash cattle sales yesterday. Live basis sales were down $2 from the day before, all the way down to $119 to $121 in the Plains. Dress basis sales just got clobbered yesterday. They were down $6 to $7 just from the previous day. So which one's going to win out, the bearish cash trade or the better government report data?
That's actually a very good question here. For right now, I think people are saying maybe we're going to see this the cash, the wholesale side of things here maybe take a little hit, and maybe we'll see that affect here the cash side here in just a few days.
All right, thank you, Rich. Appreciate it very much. Rich Nelson of Allendale Incorporated in McHenry, Illinois. We're going to be off and running here in just a few minutes, and we'll see who wins.
And another day and another report.
Mm-hmm.
Just a couple
right.
hours.
You're right. A little more data.
Thanks, Marlon.